Let's get back to the big CNBC TV 18 news break back home. Even if the GST Council gives its nod to the proposed cess, the central government expects direct tax revenues to miss the estimated 9.32 lakh crore rupee mark. In fact, during the first year of GST rollout itself. Sapna Das is here with exclusive details. Sapna, what is the quantum of this revenue gap that the centre is expecting? And, what are the likely triggers for such a shortfall?
Well, what the numbers basically indicate, of course, these are very conservative estimates which have been worked out by the centre, and these numbers will definitely get tweaked over a period of time. But having said that, what this probably indicates is that the revenue mobilization under GST in the first year of rollout would probably not be as healthy as has been the trend, say, for the financial year 15-16, because that's a base year that they'll be taking into consideration for calculation of compensation to states. Having said that, the broad revenue requirement that the government as of now is looking at is around 9.32 lakh crores, whereas inclusive of cess, probably 8.89 lakh crores is the odd number that they're looking at in terms of revenue generation from the proposed rate structure. So the proposed rate structure also, if you look at it, it's a very conservative, rate slab that they're looking at. Especially if you look at the 18% standard band which is being proposed. Here, basically, items currently in the bracket of 15 to 21% will move to the 18% band, and this will roughly cover around 31% of the tax base. Also, in terms of the other aspect, which basically talks about the 26% slab, here also items which are already in the 21% band will move to 26%. But, important items, consumer durables like ACs, washing machines, refrigerators, water purifiers, they're already in the 25% band. Plus band. So there is not going to be much of a impact in terms of the change in the tax rates. So what the government here probably is trying to indicate is that keeping the estimates and the rate structure very, very conservative. So it is palatable to as many people as possible. It doesn't create a lot of disruption. But the flip side of the coin would be that they might have to take some kind of a revenue hit probably on that account if revenue buoyancy and compliance do not pick up. Similarly, in the same vein, they are still pushing for a cess in comparison to raising tax rates for compensation to state governments. Though, of course, some of the industry chambers are also now demanding the finance minister that he should probably raise the rates by 1 to 2% rather than going in for a cess. The important part is that all of this is going to come up for discussion in the two-day meet on GST starting from tomorrow on the rates, cesses, and, of course, the dual structure also.
Okay, so we'll have